Good evening, everyone. My name's George from Barton Peveril, and I'm joined by Bradley, who's the Outreach Project Leader at University of Southampton, and he's here to deliver a session on student finance for you. This is aimed at both first and second years, so Bradley will try and adjust what he does for that, but I'm going to hand over to Bradley for his presentation.
Thank you very much, and good evening to everyone that's joined us on this live stream. We've got quite used to this now, haven't we? Kind of the world of digital and live streaming. However, with that being said, I'm actually finally back in the office. So I just wanted to apologise firstly. You can see lots of things happening in the background, a lot of chaos. That's because I've actually returned back to the office. I've been in a few times, but over the last 2 years, I could probably count on sort of one or two hands the amount of times that I've been in. So we're moving in the right direction. We're going back the right way. Things are coming back to normality, and I'm sure for all of you as well, you'll be pleased about that and planning for those next steps. And of course, for those of you that are planning to go on to university in September, hopefully you're excited about a normal university life kind of resuming, and all the bits and pieces that go with that. Those of you that are in second year, of course, you would have submitted your UCAS applications in sort of December or up to the middle of January. And really now you'll be looking at the next stage really of the things to tick off the list in terms of student finance and how that works. So I'm going to go through the system. I think George just alluded to it there, that there is going to be a slight difference in terms of how I pitch this for first and second years. Many of you will be aware that the government have recently announced some changes to the student finance system. A lot of the information I have in here is relative to the system that we'll have in place for this September, which is based on the sort of the same system that we've had over the last few years. That being said, I will kind of make some touch points on some of the changes that are going to be coming in place for September 2023. We are a bit sparse on information at the moment. We don't know exactly what that might look like. We don't know, whilst we do kind of know the headlines in terms of what the changes are going to be, we don't necessarily have the data in terms of what that will actually mean in terms of the sort of the cost to you as a student and also perhaps to a parent as well. So I'll do the best that I can. Obviously those changes have only just been announced, so we'll stick with what we've got for the moment, and I'll try and answer any additional questions that we have at the end in the Q&A. So this is the plan. We're going to start off with looking at your tuition and your maintenance loans, what they are, how much you can expect to receive, and the process of applying for those. We'll then have a look at what I think is the most important part of this talk, which is about the repayment. Student finance is unique, weird and wonderful. It's unlike any other form of lending that you can have in the UK, and the way in which you repay your loans are quite unique, and even different to the way that other nations administer their student finance system. I'll then show you a little bit in terms of kind of support from the University of Southampton. I'm going to show you what we offer as an example, but also bearing in mind that many of you will be moving on to other universities. This is just really to demonstrate that additional support that's often available from all universities, which normally comes in the form of things like bursaries and scholarships. And then finally, towards the end, we'll have a quick look at things like your accommodation costs, living costs, and other sources of income. So jumping straight into the big stuff, and starting with your tuition fees. So this one's pretty easy for me because tuition fees have changed very little over the last few years. Those of you that will remember, back in 2012, it was one of the first sort of policies of that new coalition government at the time, which was to raise tuition fees to £9,000 in 2012. And it's hardly moved at all within the last 10 years. And they've even frozen this fee, I think, again, for another 2 or 3 years moving forward. So most universities will charge you up to the full amount, which is £9,250 per year, regardless of the university that you go to or the course that you study. So it's as standard. It's not a way of being able to compare different courses. It's just the way it is. It's something that we have to accept. And as I said, most universities will charge the full amount. You are all eligible for a full tuition fee loan because this should be, I'm guessing, your first undergraduate degree. So you should all be eligible for the full amount of money, and it gets paid directly from student finance to your university. So unfortunately, it never goes into your own personal bank account. It's paid on your behalf straight from student finance and paid directly to your institution of choice. There are a few other little nuances, though, just to make you aware of. The first one is that if you're looking at an integrated master's program where you study for that 4th year and you come out with a level 7 qualification, you're also charged under the same system. So you'll also pay 9,250 for that year and apply for the loan in the same way. The reason why that's important is that traditionally, if you'd gone on to study a postgraduate qualification, even sort of 5 or 6 years ago, you would have had to have found the funding separately. There wasn't a separate funding model in place at the time. There is now postgraduate funding that's there, but those loans are separate and you pay for them separately. Whereas if you do an integrated master's program, it's all under the same umbrella, if you like, and you just make one single repayment towards that particular course. So actually, financially, it can be beneficial because you just make one repayment for your whole course. You still come out of the master's and you don't have to fund a postgraduate separately. So I quite like those, and they're quite readily available now across a lot of particularly Russell Group universities. For those of you that are looking at medicine, just to make you aware that that 5th and or 6th year, if you have one, is replaced by funding from the NHS. So they will foot the bill of your tuition fee. That's covered by them. And they'll also give you some living cost money as well. But just to make you aware that quite often that sort of 5th or 6th year, that funding will be slightly less within the latter years. So it's worth just giving you a heads up now, so you're not surprised when the time comes. If you're looking to do a year in employment, there often is a tuition fee charge associated with that. At Southampton, we charge 20% of the full fee. Some universities will charge different amounts depending on their own systems, but you can still apply for that with a tuition fee loan. So in exactly the same way, you'll apply straight to student finance and they'll pay it to the institution on your behalf. If you choose to study a year abroad, your fees essentially depend on where it is that you're going, the country that you're going to study in. If you're going for a full year, if you're going for a semester, there's all different funding types there. So just to let you know that the funding does exist. If you do go and do a full year of study abroad, there is funding in place, and actually it's fairly generous. If you go for shorter sort of semesters and stuff, the funding does change a little bit. But if you do the full year abroad, you're fairly well covered. And that's pretty much it. The only real question that we tend to get when it comes to tuition fees is what happens if things go wrong? What happens if you want to change course or go to another university, or you need to retake a year? And what usually happens is student finance will give you an additional year's worth of funding. So they will cover you for your full degree. So if your degree from the start is a 4-year program, they'll give you 4 years of funding plus an additional 5th year should you need to take it. So there is that level of flexibility. You should, in most cases, be eligible for these. You need to be a recognised university. You need to be studying full time, and it needs to be your first higher education course. The only thing that might catch you out is rules around residency. You do need to be a UK citizen or have settled status or a visa of some sort to allow you to work in the UK. But you also need to have resided in the UK for a set period of time. Depending on your visa status, that's either 3 to 5 years. It does also make a difference for people that were born in the UK and have a UK passport, but maybe spent some time abroad. Sometimes there are issues there around residency. In most cases, it can be sorted. If it's a case of needing to wait an additional year to get that funding, then that's something they might want to think about. But really, for the most part, most of you should be eligible for all of this funding. So when it comes to maintenance loans are there to cover your living costs. So whether that's your halls of residence or your food costs or bills or anything else that you need to cover for kind of your social lives, your maintenance loans are there to help. But the amount that you receive is all dependent on you and the decisions that you make, and also your circumstances in terms of what they call household income. So the first 3 things that you're going to be assessed upon is, firstly, whether you decide to live at home. So you live at home with parents or guardians and commute to your university campus. So if you're local to Southampton and you're going to come and study at Southampton, this would be you. If you're going to move away from home, and this could even be if you're local and studying local, but still move into halls of residence or private accommodation, or it might be that you're going off to Glasgow and going off to Scotland. If you're living away from home and you go into accommodation, there's also a higher amount available to you of up to £9,706 for next year. And if you study in London and obviously have moved away from home, there is a higher amount available as well, because obviously the cost of living will be that much higher and your accommodation will be significantly higher if you study in London. As of a couple of years ago, there was a new bursary that came in place for nursing, midwifery and allied health professions, which includes things like physiotherapy, and those students receive an additional £5,000 per year as a grant. So that's non-repayable, which is fantastic. It's great that they've put some provision back in place, because it wasn't there for some time. The only caveat I would say with that is that a lot of those students will have less hours in their week to work part-time. So whilst it is great that you have that funding, just bear in mind what it's essentially doing is kind of making up the shortfall of the fact that a lot of those students won't have the hours to work part-time. So essentially what happens is, firstly, they'll look at your circumstances in terms of this. Are you living at home? Are you moving away from home? And then they'll make an assessment based on something called household income. And household income could possibly be different for you depending on your own circumstances. So it could be based on one household. So if you live with parents in your permanent address, then the taxable income of your parents will be assessed. That's your household income, and then that will give you an amount to live off each year. It might be that you live across two households, in which case you should select the one where you primarily reside to spend most of your time. If you live between two households 50-50, then you can choose which household to apply from. If you live with a partner, if you've got a step parent that lives in your home with you, their income is also assessed if they live in a household permanently. And that is something that catches a lot of people out. Sometimes there are quite unfortunate circumstances that kind of arise from that as well. Unfortunately, they are the rules. They're the rules that are set by Student Finance England. So a parent and or step parent partner that lives in the household would be included in that assessment. So if your household income is less than £25,000, you are effectively entitled to the full amount of money. So if that was living away from home, that would be £9,706 for this coming September. And obviously those figures will go up every year. So we'll get to a point in the next couple of years where that'll probably be about £10,000. Then from there on, the higher your household income, the less you will receive. So if your household income is 45,000, you'd receive 6,929. And then it gets to the point where they stop assessing you, essentially. So for living away from home, it's just over £62,000. But if you were earning £80,000, or that was your household income, they would stop to assess you, and effectively you as a student would receive £4,524. So it doesn't drop off to zero. This is where the table stops, if you like, and that's where they'll stop to assess you. If you're living at home, they'll stop assessing you after just over £58,000. So you can start to get a picture already of where you will fall within this table. You can go straight to the bottom of the table and know that's where you're going to be, or you can roughly work out where you're going to be within those different segments. Once you know how much you're probably expecting to receive, and that will come through the correspondence from Student Finance England, obviously it's a good idea to then sort of split out and budget for the rest of the year. So we'll talk a bit more about that in just a moment. But that's obviously to cover you for the year. You'll apply for it every single year. If your circumstances change, then obviously you might receive more or less money year to year as those circumstances change. So in terms of where you apply, everything, like most things now, is done online. So you go through the .gov website, and applications have just opened. They were a little bit later than they normally are. I think they opened sort of within the last sort of 5 or 6 days. So you can now apply for your student finance if you are in year 13. If you're taking a gap year and you've done a deferred application, you do not need to apply for this until next year. So you can leave this for now. But for those of you that are coming in September, you can apply for this now. You do not need to have received all of your offers to start that application. You can do this based on your best estimates for what you think is going to be the case, using the university and the course that you think you're going to go on to study at. They can then do the household income assessments, which is the bit that takes the longest. And then you can come back and amend that, because really the changes that would make to your application is very small, because as I mentioned, the tuition fees are fairly standard and that maintenance will only change a small amount. The deadline for applications is towards the end of May. You can apply for it after this time, but it's just to ensure that you're guaranteed that funding for the start of the year. So whilst you can apply for it after that time, it is recommended that you get it done before the end of May. So you go through the website. Your applications are assessed, which is what takes time. Be prepared to kind of sit down with people that are supporting your application and spend sort of 45 minutes to an hour going through that. you'll need certain bits of identification to prove who you are. You'll obviously need proof of earnings and that sort of thing. And it will be based on the financial year previous. So obviously, because the application's open before the end of this financial year, it will use the one previous. And that's all taxable income. So for a lot of people, that'll be salaries. If you're self-employed, obviously, then you'll use your self-assessment. But it would also include things like property income or pensions, all that kind of stuff. Anything that you pay tax on. It wouldn't include, probably in most cases, your savings, unless they are very large and you pay things like dividends or dividend tax. And it doesn't include any part-time work that's undertaken by the student. So anything that the student earns is not included in the assessments. So you'll start to receive correspondence from them. You'll sign bits of paper and you'll get everything kind of signed off and dotted on the line. And then you'll get to a point when you'll receive your payment schedule letter. So all that letter will say is that this is the amount of tuition that you can have, and this is the amount of maintenance that you're entitled to, and this is when we'll pay you. And students get paid 3 times a year. So for students that are listening to this, if you think most people get paid monthly, some people get paid every 4 weeks, maybe every two weeks or weekly. For students, you get paid termly, you get paid 3 times a year. So you have to be really careful in budgeting the money that you have, because it's very easy for it to disappear quite quickly, particularly in those sort of first few weeks of university. So you need to be prepared for that. So the first installment you'll get is when you enroll. So you turn up to your university, you've got your student card, you're all ready to go, and then that money is released to you. So lots of people will ask, what should I do if I'm not sure whether I'm going to go to university or not? I might go on and do a degree apprenticeship. I might go on to do an apprenticeship or something else, or go on into the workplace. Effectively, you can go through this whole system, but nothing actually happens until you arrive at your university and they know that you're there. And that's what will kind of kickstart things and kickstart that mechanism, so that you start to get paid and that those payments are made. The second installment is after Christmas in January, and that third installment is after Easter. So once you come back from the Easter holiday, and that third installment tends to be a little bit higher to see you through the summer months. It's a small amount, but they tend to pay you a slightly higher installment for that third and final one after Easter. So that's it really. It's fairly straightforward. As I said, put some time aside. Don't dilly-dally, kind of get on with it and make sure you give student finance the time to go through that application, look at household income, and then hopefully you'll be good to go and you'll receive that payment schedule letter. So this is really the big one for me, and this is around repayment. Now, as I said, there are some changes afoot, and that will make a difference to those students that are in year 12, or if you're planning to take a gap year and you're in second year, then you will effectively move on to this new system. And it's very similar to the one that we have at the moment, but there are a few little changes that will ultimately make a difference to what you pay over the long term. So it will make no difference at all in terms of the short term and what will happen in those initial years going to university. Tuition fees are frozen, maintenance loans will stay as is, but the repayment system is changing slightly. So how and when do you pay back your student finance? And obviously this is the bit that tends to concern people. So the first thing to understand is that your tuition fees or your tuition loans and your maintenance loans are pulled together into one pot. So people get this confused straight from the start, because they have an idea that these are 2 separate loans and you must pay for them separately. They don't. They all go to the same place. They all go to one pot. What then happens is you pay a percentage over a particular salary. So at the moment, for current graduates who are in repayment, they're paying 9%. So it's always 9% on everything above £27,295. So effectively what that means is you can go through your whole university education. If you come out the other side and in your first job, you're earning £25,000 and you're on this side of the red line, you won't make any repayment contribution during that time. As soon as you pass that red line, then you'll start to make those repayments. And I'll show you what that kind of means in principle in just a second. It's taken straight from your pay packet. It works very much like a tax. Any of you that have watched Martin Lewis do all of his stuff on TV, he will often refer to this as like a graduate tax or a graduate contribution, which psychologically is a better way of thinking about it, just kind of on the backdrop of the fact that they are loans that you're receiving. But it just kind of it changes the psychology in terms of how the loans actually work in practice. What will happen is you start to repay from the April after you graduate. So for most students, they'll finish their sort of 3rd or 4th year. They'll do their final exams kind of end of May, beginning of June, and then you'll go off to do whatever it is that you go on to do, be it your first job, graduate scheme, travel, whatever it might be. And nothing will happen instantly because you don't start to make repayments until the April after you graduate. So you go from June all the way through to April in the following year. And then essentially what happens is you enter repayment and a clock starts to tick. So after 30 years of making repayments, the loan, regardless of what is left, is written off. However, the two things that you see on screen in bold are two of the important pieces of information that are changing for students that are going to university from 2023. So the 30-year period is being increased or extended to 40 years. So it's going from 30 to 40 years. So you will pay for an additional 10 years. And they're also lowering the repayment threshold to £25,000. So these are two of the three big things that they're really changing. Is they are extending the repayment period, and they're going to slightly lower the repayment threshold from when you start to make those repayments. So worth bearing that in mind. What do I think? What's my opinion in terms of what that actually means for you? The honest answer is, and it's got nothing to do with the fact that I work for the university or anything else, because I'm largely impartial. But if you want to go to university, you absolutely still can go. 40 years is obviously a long time to make those contributions. Yes, I would love for university to be free and that there wasn't a system that kind of underpins it, but there is. And this is a slight change and a slight nuance. For some students, and I'll show you why in a moment, it might actually be beneficial for you if you're a much higher earner. For others, by the time you kind of get to those 30 years, it just means that you'll have those additional payments towards the back end of your career. So rather than your loans being written off in kind of your early 50s, you will make repayments on your loans for probably the majority, if not all of your career. So they are two of the changes that are coming from September 2023. If that has put you off going on a gap year, then it is definitely something to start considering, because obviously if you are in second year now and you're going to take a year out and go in the following year, then you would be subject to that new funding system. So there are the two changes that we expect to come. It's all a little bit wishy-washy at the moment, but we're pretty sure that's coming. So what does that actually mean in practice in terms of those repayments? And again, I've obviously based this off what the current system is. So as I said, if you earn less than repayment threshold, you'll pay nothing. And effectively, you could borrow £40,000 to £50,000, and bearing in mind, some of that money is for you to live off as well. So we have to really kind of realize first that even before we think about paying off tuition fees, we're actually just paying off money that we had to live off before we even get to the other portion of it. So if you earn less than the repayment threshold, you'll pay back nothing. And if that's all you earn for the 30 years or the 40 years, you won't pay back a single penny to the money that you've borrowed. However, we obviously expect that graduates will go on and earn good money in some cases. Everyone's motivations to go to university is different. Some will go to try and earn more money and be more comfortable. Some people will go to university to pursue a particular career or vocation. And that's really important to understand, that for some people that are watching this, they might be quite money-minded. And for other people, their reasons for going to university might be completely different. But on average, university graduates earn £12,000 per year more than non-graduates. So we expect graduates will go on and earn more money. What would then happen is, if your boss calls you in, you get a promotion and you're now on £28,295, you've now crossed that kind of red line and you're £1,000 above the threshold, you pay 9% of the £1,000, which is £90 per year or £7.50 per month, which obviously, if we kind of put that in real terms, I used to say years ago, you could probably go to the cinema for £7.50, but I know you definitely can't these days. It will just about buy you a McDonald's meal probably, and that's probably about it. So you'd make a very, very small contribution on that sort of salary. If your boss calls you in again, you're doing really well, you've got a second promotion, and you go from here to here, and you're now earning £31,295. you pay 9% on £4,000, which is £360 per year or £30 per month. And again, if you think about things that you might spend £30 a month on, that might be your mobile phone contract. Maybe your mobile phone contract's closer to £75. It's a small amount of money in terms of kind of the investment that you've put into yourself. The more that you earn, obviously the more that you repay. And I'll try and give you some examples in a moment as to what you'd actually need to earn to pay off the loans in full in their current state. If you retrain or you take a cut in salary or your circumstances change, it's all done month to month. So it's done on a monthly basis. So if you decided to change career and train in something completely different and your salary drops, then your repayments would drop with that. So it doesn't stay at the highest point. It moves with you depending on what you earn. Obviously, if you're self-employed, you do it as part of your self-assessment once you complete that the following year. So this will be part of the third and final change for 2023, but the interest rates on these loans have been a real bone of contention over the years, and they've been really made overly complicated. It was a strange thing that they kind of included when they put the fees up, which is the way in which the interest rate.
Hello, everyone. I've just had a notification that StreamYard is undergoing some technical difficulties, so please bear with me whilst we get Bradley back, and then he'll resume where he left off. Hello, everyone. So it seems that we've lost Bradley, but not to worry. I've roped in the help of Rosalind Laird, who's our employability manager. So I'm going to field Ros some questions.
Hello, everyone. So it seems that we've lost Bradley, but not to worry. I've roped in the help.
Hi everyone. Sorry about that. It's always fun when doing these things online. So I'm going to try and answer some of the questions that George will field over to us. So please, if you have any questions about student finance, try and pop them in the chat and we will go from there. So George, I don't know if you've got a first question that you want to send over.
I certainly do. So James would like to know if his student finance application doesn't recognise the course that his university has offered him, what should he do?
The best bit of advice I would do is just first of all make sure that the course title is exactly the same. Sometimes on UCAS, the course title can look a bit different when looking at it from your side. So just check that the course title is correct and the course code is correct when doing your application. If for some reason it's still not working, it could be a new course from Southampton that isn't updated on the student finance system. So it could be worth just dropping student finance an email or drop into the progress zone in college with your student finance application on a Chromebook or a laptop, and one of the team can have a look at it and try to see what's going on there. Normally it's quite a simple fix, so hopefully one of us should be able to figure it out for you.
Fantastic, thanks, Ros. And yeah, just good to reiterate that the careers department at Barton are fantastic and are always on hand to help students, even after they've left. So there's always help there for you. Right. Carol would like to know if you start on a BSc course and then transfer, say in your third year of university, to an MSc course, how is your loan treated? Is it affected at all?
So it will be affected because you're changing the length of that degree. So you're changing from the 3-year degree, which your original kind of loan agreement was stated for, to a 4-year degree. But as Bradley said earlier, under the student finance agreement, you have that year plus 1. So it will just be changing that length of the degree with student finance, and then they'll sort it all out at their end for you. So it won't be too difficult to sort out, but that'll just be kind of what you need to do there.
Brilliant. Thank you very much.
It's okay.
So there's a couple of questions here actually about repaying your loans. So can you make overpayments, and if so, how?
So you can change the money that you are putting into paying off your student loan, but depending on who you talk to will depend on their recommendations for doing this. If you are in a position where you do feel like you can pay off your student loan because the money that you're paying back, then great, go for it. You can contact the student loans company who deal with the repayments for your student loan and just change the kind of percentage that you do pay. So for instance, if you go out of university, have the dream high earning graduate scheme job, you can start to pay back more increments. But you have this other argument that if the government is saying this is the minimum amount we want you to pay back, and at this pay scale, this is what's expected of you, there is that point of why would you pay that bit back when you could put that little bit of extra money into something like a savings account with some good interest on it and do a bit of future proofing for yourself so that the money that you would pay back on a student loan, you're putting towards something else in the future. As kind of Bradley was talking about there, the repayments have that 30 years for second years, and it's going to go to 40 for first years. But even then, depending on your wage, you're only expected to pay that amount over the threshold. So anything additional, I've come from a Scottish heritage, so this is probably where it's coming from, would say to put into kind of an interest account, a bank account with good interest, which I know isn't available at the moment, but hopefully when the economy starts to recover, that then you can build on that for things like deposit for a house, future proofing, etc.
Fantastic. Thank you. Yeah, I think it's one of those things where people need to make their minds up for their personal situation, don't they?
Yeah, and that's entirely it. You might be in a position where you don't want to pay back any additional money or go into any additional debt, but So you do want to pay that off, but equally you might want to think about what else you could do with that money. So you can talk to different people about getting some financial advice if you are in that situation as to the best thing to do for you.
Brilliant. We've also had another couple of questions about sort of budgeting your maintenance loan and how the best way to go about that is. So do you have any advice in your experience for budgeting your maintenance loan?
It's quite interesting, this one, because a lot of people have a lot of different advice, and you can ask lots of students about what they do. Some have really good practice, some have more questionable practice of using their loans. But always what I would say is start budgeting before you even get to uni. So start thinking about what accommodation you're looking at with the student finance you can get, because that's the best place to start. The accommodation payments come out termly as your maintenance payments go in termly. So you're never going to be expected to pay all of those accommodation payments in that first term, for instance. But it's good to kind of think ahead and assess, do I need to get a part-time job? Do I need to see where other funds of money are coming from? So thinking about, first of all, that accommodation, which is going to be a big chunk. What's your non-negotiables? What are things that you're more willing to kind of negotiate with in terms of getting a lower accommodation cost? But also then thinking about things like average food prices. So where are you going to do your food shop? Is there an Aldi nearby or a budget supermarket if you want to save a bit more money? Thinking about your outgoings that you're already committed to. So like your phone contract, is that something that you can cut a cost there? There's lots of other ways of preparing for university. So what do you need to take with you rather than what would you like as a bit of a luxury? Books for the course, I always say, is a huge way to save money, because universities have huge libraries and the majority of texts are online. So that's another way I always say to save money. Best thing to do is assess your current outgoings at the moment. So what, as a student, are you spending money on now? Talk to your parents about cost of food. Maybe go with them to do a food shop and see, okay, if I was going to buy food for a week, what am I going to be spending on that? And then you can see kind of your weekly and monthly earnings and payments going out.
Lovely. Thanks, Ros. So we've had another couple of questions. Chloe asks, how does a personal independence payment affect student loans? And Lou extends this a bit further and asks, are there any additional grants or loans available to help disabled students, so those that have a PIP?
Yes, so PIP doesn't affect the kind of maintenance loan because it is an additional payment because of a need. So it won't affect the payment you're going to get in terms of the means tested maintenance loan, because that's done on your parents' household income, typically, as opposed to what is coming to you. For students who do receive PIP or have a disability, some mental health conditions, and also some learning differences, so things like dyslexia, autism spectrum, Asperger's, are eligible for something called the DSA, so the Disabled Students Allowance. On your student finance application, it will ask you if you're going to apply for this. And if you fit any of the categories or eligibility criteria, hit yes. Because what DSA allows basically is for students to have an assessment, and you go and meet with an assessor who asks you about what support you need for university, transitioning to university, how with your needs can university be made more accessible, more supportive, and then they produce a report of recommendations of, for X student to go to university and thrive, they need Y, and the university puts that in place. So that might be funding for a laptop. It could be ensuring that you have the correct setup in your halls, making sure you have a ground floor halls, or one that's a bit more a larger space so that you can maybe maneuver a wheelchair or another mobility device. But it also could be things like taxi credits or credits for PAs as well. So there's lots of really good advice on the DSA website and part of the student finance website itself. There's also information on UniFrog and the Careers Hub, which both students and parents have access to. And you can also email into the Careers Department, or your children can book in to see us and we can talk through it a bit more with them as well.
Yeah, definitely. Like you said, if you're proactive, there's lots of resources available in Barton, also outside of Barton. The universities have been going through this for years. So they know exactly what students need to know, and then there are resources available so that it's actually out there.
Yeah, and we all do this every year, so we get used to knowing what's going on and the changes, and we know what our students are experiencing. So we're always happy to talk to you guys about this and any problems you might be worried about.
Lovely. Tracy has got a question, and Tracy asks, is the nursing bursary means tested, and is this any different for Welsh universities? I think it's also worth noting that are the student loans different for universities in the UK, but obviously not in England?
Yes, so I'll start with the end of your question about whether there's any difference in terms of kind of the other home nations, so Wales, Scotland and Northern Ireland. There isn't, unfortunately. You're still going to be paying that £9,250 because you're an English student going to one of those universities. Quite often, it's more seen with the Scottish universities, where Scottish students don't have to pay a tuition fee, but English students do. So you're still paying that same student loan, but it's the same system as well. So it just goes from the government to the university, doesn't go anywhere near you, and you get the same maintenance loan as well. For the NHS bursaries, they are not means tested. It was brought in, I think, in 2020 that it's an encouragement to get students into and young people into those careers. So all students get that same £5,000 towards a grant towards their kind of maintenance to help with those university costs. So it doesn't depend on your household income for those.
Lovely, thank you. I've got quite a topical question, I think, now. Bradley touched on it a little bit, but just be interesting to get your opinion. So what's your advice for students that are thinking of deferring this year? And should they reconsider their plans, again, given the new changes to student finance?
Oh, I think this one's really difficult because you're dealing with two really big topics here. You have the topic of money, which is so important, and these changes that are coming in are going to affect these students. It's an extra 10 years of repayments at a different threshold, and it's something that is going to have a long-term effect, as Bradley discussed. But you also have to consider the fact that students are applying deferred entry for a reason. They have made that decision to apply deferred entry because they want a gap year, they need a break. They might want a bit of time to actually consider if university is right for them or if they want to explore another path. So for me, I would say it's having that balance between what's my reasoning for wanting deferred entry, and does this money, does this change impact this original decision? If it does, you can contact your universities and ask them if you can go this year as opposed to next year. It's not guaranteed that the universities will say yes, but the majority of universities for the majority of courses should still consider your application to go this year as opposed to next year, and they will give you kind of a answer in a reasonable amount of time if they are able to undefer you, if you will. If they say we can't undefer you, you'll still hold that deferred place. So it's worth asking just in case, because they won't change your status as opposed to if you're going this year or next year without that final say from you. So if you want to ask the question and test the waters with the universities, go for it. If you are really confused as to what to do, book in and come and chat to one of us. We've all, as a team, gone through a bit of training on these new changes to student finance, and we can't tell you what to do, but we can be a listening ear and help kind of you to navigate the decision that you're going to be making.
Exactly. I think you're spot on there, Roz. All we can do at Barton is offer our opinion on these sorts of questions. And again, going back to what you said earlier, it's very personal, and you have to work at what's best for you, and everyone's in a slightly different situation.
Yeah. And sometimes you just need that kind of ear to listen to, someone who can sit and ask the questions you might not have thought of. So we're always very happy to do that.
Exactly. So we've got a question from Francisco, and they ask, how are the repayments working if you move abroad during your professional career? For example, if you spend 5 years abroad, 10 years after you graduated.
So this depends on your student loan agreement, as in what agreement you are under when you go to university. So it will differ slightly for the new agreement, and it changes for where you are living abroad. And the most helpful thing is this is not made clear anywhere on any information that we have access to. So the best bit of advice that I can always give is contact student finance directly and ask them when you're in that situation. For some EU nations, you would still pay when you went over there. And for some post-Brexit, you don't pay now that you've gone over there. So it is really in muddy waters with those at the moment. So the best bit of advice is check directly with student finance and the student loans company.
Sorry, thanks, Ros. So we've had a question, again, talking about the future once you're working, you've had your time at university and you're looking at paying back your loan. Does having an active student loan affect applications for mortgages? Ask Carl and Wendy.
It's a really good question, and it's something that a lot of people worry about because it is seen as this debt, and we all associate debt to be a really negative word and have these negative connotations. But actually for a student loan and mortgages, it doesn't matter. So it's seen as a positive debt in terms of mortgage applications and kind of your credit score, because everyone has a student loan. You know, we've got some people who are in a very fortunate situation where they don't need a student loan to go on to university, but the majority of us do take out some form of student loan. So for us, we have that student loan. So all mortgage applications and mortgage lenders know that the majority of people have a student loan. So it doesn't affect applications for mortgages. It's seen as quite a positive thing because you've gone to uni. And as we've seen, the repayments are quite small in comparison to a traditional mortgage payment. So it's seen as just a normal thing most people have.
Lovely, thank you very much, Ros. So a question from Kate. What's the deadline for student finance application if you start uni in 2023?
So as Bradley said, there is a deadline for student finance applications in kind of mid to end of May. It's normally around the kind of 20th, 21st of May. But that is a deadline to ensure your application is processed by the time you start uni in September. The reason for that is at the peak time of applications, which is now, they say it can take up to 12 weeks to process your application. So they give that May deadline so that it's in place for a September start. But if you change your course idea or apply through clearing, you can apply later than that. It's just they can't guarantee it will be in place for September. But for ones done around results day and clearing, they will try and push them through as quick as possible. So my best bit of advice is if you know you're going to uni this September, or you think you are, get your application in and done as soon as possible. You can change the details on your application of the uni you're going to, the course you're going to study, and lots of other information on there. But getting yourself in and in the system means that the job's done and it's ticked off the list.
Lovely. And I think we've got one final question. There are some questions we appreciate that were aimed at Bradley. Unfortunately, so he's not here anymore to deliver the talk. What we will do is speak to Bradley and see what we can do in terms of recording his presentation and sending it out separately. Again, if you've got any questions that are specific to Bradley, we'll give you a chance to ask those later on. So, final question. Lily asks, for students who would be abroad next year during a gap year, how would this work with applying for finance and accommodation, such as needing to sign any documents in person?
That's a really brilliant question. And that's the first thing I always say to students. If you're going abroad during your gap year, you need to be able to have Wi-Fi and solid Wi-Fi for kind of that March February, March, April period, when you are going to be applying for student finance and you are going to be applying for your accommodation. It typically is all done online at the moment, and has been for a couple of years. So you are well set up for if you are applying for student finance and accommodation and are not here, because it is all done online and they can do versions with online signatures and those kind of things. But the important thing is making sure you're somewhere with a secure internet connection and that you have all the documents you need. So as Bradley was saying, to complete your student finance application, you do need things like a passport and your national insurance number. So it's making sure you have those and know what they are, so you're able to apply for your student finance.
Lovely, thank you very much, Roz. I think I put up there in terms of questions. As I said, we'll get hold of Bradley and see if we can deliver the talk again recorded, and then we'll send it across to all parents, students, and guardians at some time in the not too distant future. Again, it's worth reiterating that this is part of Careers Week at Barton Peveril and National Careers Week more wider than that. So there's lots of talks that people can access through Barton and beyond, and we'll keep posting those for you on the My Barton intranet page for students and on social media channels for parents. Thank you very much, Roz, and thank you everyone for your patience as well with the technical difficulties.